begin today's lecture, in which I believe in the last lecture we had covered some very important concepts like the measurement of national income, in which we covered the gross domestic product, in which we covered the NDP, net domestic product. We also covered GNP, gross national product, and we also covered NNP, net national product. Then from net national product, we also covered per capita income, PCI. Now, these are some of the measurements of national income. Now, when you study NCERT, in the NCERT, there are some subdivisions of the national income. There are some subdivisions. So we'll look at one or two subdivisions of national income. The first important subdivision would be the personal income. The personal income. So if anyone asks you what is personal income, it has a simple definition, and the definition is that it is the part of national income. It is the part of national income received by household. So it is national income, part of national income only, which is received by household. Now, you have to be very attentive in the class. You have to understand that it is the part of national income which is only received. It is received by household. That means in our country, we have these households. Every unit is a household unit only. That is the family unit. So we have these households, and the income that these households receive in the country, that is known as the personal income. Fine. There is a difference between personal income and personal disposable income. That is entirely different. So first of all, we are looking at personal income only, which is the part of the national income received by the households. So in India, let's say 200 crore is our national income. And out of this 200 crore, what is the part of the national income that is received by our household? Okay. Now, there is a particular formula for that. How do you calculate personal income? The personal income can be calculated like this. Personal income is equal. Please write down. Personal income is equal. So personal income is a part of national income. So it has to be taken out of national income only. So it has to be taken out of national income. Now, from the national income, that is, let's say in India, this is 200 lakh crore. That is the 200 lakh crore. That is the national income of India. Out of this 200 lakh crore that has been produced, it is the money value of all final goods and services produced in the domestic territory by the normal residents and all. It is the same definition that we have already studied. Now, when we talk about national income, let's say we are talking about GDP only. Now, a part of this GDP, a part of this 200 lakh is not received by households. Which is the part which is not received by households? Now, let's say in this India, we have a company. Fine, we have a particular company. So this company or corporate, we can call it corporate. So the corporate has earned in a particular financial year from 1st April to 31st March. In this particular year, this company has earned 100 crores. This company has the profit of the company in 1 year. The profit of the company in 1 year is 100 crores. And these are the people of India. Now, let's say they are the shareholders. They are the shareholders in this particular company. So these are the shareholders of the company. Okay. Now, we know that when the company has some profits, these profits have to be distributed among the shareholders. And we call that dividend. That means the profit a particular company is having, a part of that profit has to be shared with the shareholders, and it is known as dividend. Now, we know that the companies, the corporates, has at the top of it, they have the board of directors. Now, these board of directors, they decide that how much profit has to be distributed as dividend among the shareholders. Kitna profit we have to distribute. Let's say these board of directors have decided that we will be distributing 70 crore among the shareholders as profit, as dividend. So this is being distributed. 70 crore is being distributed. But what is remaining? 30 crore is remaining, which has not been distributed. Therefore, when this 30 crore is not distributed among the shareholders, it will not be received by the household. What is personal income? Personal income is the income that has to be received by the household. So when you are not distributing these 30 crore, it will not be received by the households. Only the 70 crore will be received by the households. 30 crore will not be received by the households. This 30 crore is known as undistributed profit. It is known as undistributed profit. So this is the part of national income. This undistributed part is the part of national income which is not received by household. So from this national income, we will deduct this undistributed profits. Why? Because it is not received by households. Therefore, it has to be deducted. Now, these undistributed profits do not have to be, we don't have to, we don't have to distribute it. Therefore, it will not be received by the households. Therefore, our new formula for personal income would be personal income is equal to national income minus undistributed profit. Undistributed profit. But there is another part of national income which is not received by the household. Let's say this is a particular household. This is a particular household. Now, this particular household has taken a loan, has taken a loan, has taken a loan. The household has taken a loan. On this loan, this house has to pay an interest. An interest. So this interest payment that you're doing, this is the payment that is not received by household. This is given by households. It is given, not received. It is given by households to these companies, to these institutions. Then these particular households, they also provide loan. They also provide loan, and on that loan, they earn some interest. They earn some interest. Now, this is the interest that is received by household. That is received by household. So you have two kinds of interest payment. One is the payment that is given by household, and another is the payment that is received by household. Let's say the payment received by household is 200, 200, and the payment given by household is 300. So you are giving out more and you are receiving less. So when 300, what is the net interest payment? The net interest payment is 300 minus 200. The net is 100. This is the payment that is given by households, and that is the outflow. That is the outflow. Fine. So this money, this 100 is not received by households. Therefore, we have to deduct it from national income. From national income, you initially deducted undistributed profits. Now you have to deduct net interest payment. Net interest payment. Net interest payments. NIP. Net interest payments. All right. After that, there is one more part which is not received by households. You have to deduct it from the national income. वो भी is not received by households. Now, this is a particular company. This is a particular company, and this company has earned a profit of, let's say, 100 crores. 100 crores. That is the profit, gross profit. That is the profit. Okay, total profit. Out of this 100 crore, these companies have to pay 20% as corporate income tax. They have to pay corporate income tax. Corporate income tax as 20% or 22% or 40% for foreign companies. They have to pay some taxes on their profit. Now, this 20% that is taken out of these profits, it is taken by the government. It is taken by the government. It is not received by households. It is not received by households. So corporate income tax is not received by households. It is received by the government because it's a tax. So from the national income, you first have deducted undistributed profits, then you have deducted net interest payment, and then you have to deduct corporate tax. Why? Because corporate tax is not received by household. Fine. So these are the three things that you have to deduct from national income. But you also have to add a particular thing in national income. National income में एक चीज add करना पड़ेगा. What do we have to add? These particular households, they produce some value and they create the national income. National income total बनता है production से. But they also receive some payments from the government in the form of, let's say, pension, in the form of, let's say, transfer. इसको हम transfer payment कहते हैं. We call them transfer payment. Transfer payment is like government is giving you money without taking anything from you. So pension आपको दिया जा रहा है, nothing is taken back from you. Let's say scholarship आपको दी जा रही है. Let's say we have this Pradhan Mantri Janani Suraksha Yojana, in which every lactating mother is given 6,000 rupees without taking anything from her. So 6,000 रुपए continuously दिया जा रहा है. This 6,000 rupees, these pensions, they are transfer payments. These transfer payments are not part of GDP. They are not part of GDP. They are not part of GDP. They are not part of national income. Why? Because these are given without producing anything. You have a transfer payment. You are giving pension to a person who is old age. In 90 years, you are giving him pension. He is not producing anything. He is not contributing anything. He is not doing anything. And still you are giving him money. That is part of his income, but it is not part of national income, because national income is only calculated out of production only. So if you have to calculate national income, you have to see what is the total production. And a pension holder who is of 80 to 90 years of age, he's taking the pension without producing anything. So that's a transfer payment, and transfer payments are not part of GDP. GDP में सिर्फ production ही हिस्सा रहता है, transfer payment उसका हिस्सा नहीं रहता. Fine. So, but these transfer payments, though they are not part of GDP, but these payments are received by the household. They are received by the household. Therefore, it has to be added. Transfer payment. Transfer payment. That completes your total. That completes your total formula for personal income. So this is the formula for personal income. Personal income is equal to national income minus undistributed profits minus net interest payments minus corporate tax plus transfer payments. Is it clear, guys?